Hello traders, my name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report, where I will show you what's going on the markets from the fundamental and technical point of view. So first what we will do is we will start with the macro calendar. And macro calendar is all about the Reserve Bank of Australia rate statement and interest rate decision. And we got Reserve Bank of Australia left the rates unchanged, but they removed couple of important notes from the statement from November. The first one was that a higher exchange rate is waiting on the outlook for output and employment, and the second one is that inflation is likely to remain low for some time. Those are like the most important. And this was a hawkish information for Australian dollar, and also along with Australian dollar, New Zealand dollar was stronger, so currencies from antipodes are doing much better right now, are one of the strongest on the market. Fundamentally we are influenced by the political situation in US. Government shutdown is about to happen on Friday. There are chances, obviously, that it will not happen, as every year they have this problem, but they always try to come up with something in the last few days before it is going to happen. It is about to happen, so most probably they will delay that as well this year. So we won't have this government shutdown, but it's looming right now. Also, obviously, tax reform, which is more influential for stocks, not for the forex market. The most important information for forex market are Brexit negotiations. Apparently, some members of the negotiation process were pushing for a fast deal, but BBC reported that it's not actually the truth, and it will be hard to get the fast deal in the current situation. And now British pound is heading lower. Apart from that, in the calendar, what do we have is the PMIs today. PMIs from Eurozone came slightly worse than expected from Spain and Germany. From Eurozone altogether were in line with expectations, still very high, above 56, 57. And still to come, 4-5 hours, we'll have PMIs from US and trade balance from US. And that is the macro calendar right now. So let me show you now what is going to happen. What is happening on the charts right now? Maybe I will switch the live trading account because live trading account will be shown on a live trading webinar, but it's going really good. Equity is close to all-time highs, so hopefully I will continue trading this way. Let me show you euro dollar first. Obviously the most important, maybe not the most important, but the most popular currency pair. Now what do we have here is a sideways trend. This resistance on 118.60 was the most important recently, but I think that the recent developments on this pair are forcing us to move the support a little bit lower we have to adjust it to the current situation on the market, and 118.30 seems more important at the moment right now. We are fighting on the midterm uptrend line. This midterm uptrend line is not so important as it was before. Crucial currently is this horizontal support here. Breakout of the horizontal support should trigger a sell signal, and breakout of the green resistance should trigger us a buy signal. So far we do not have an interesting situation here. It's more of a wait and see approach here. We had some decent trading signals on euro dollar, but for new trading signals on euro dollar, unfortunately we have to wait a little bit more. Australian dollar to Canadian dollar here, I was seeing a nice selling opportunity. It's still present here, but this hawkish statement from Reserve Bank of Australia complicates it a little bit. Why is that? Why I had still have a positive outlook on Australian dollar, negative outlook on Australian dollar to Canadian dollar, is the fact, look at that, that's a weekly chart, so long term, and we broke long-term uptrend line here. Then we used that it was a support, then we used that as a resistance, and last week the price created a beautiful shooting star candlestick, so broken support became a resistance. And also we used this horizontal support as a resistance. That for me was a very negative sign for Australian dollar to Canadian dollar. This situation would be definitely over easily with the statement from Reserve Bank of Australia, but the fact is that Canadian dollar is also very strong. And also, what is more, we will have interest rate decision and statement from Bank of Canada as well this week. So definitely this pair can expect volatility this week. I think that as long as we stay below the orange area, the sentiment is still negative on this instrument. That's just a normal correction. Business as usual, I would say. Sell signal is present here as long as we stay below the blue horizontal resistance. Next one is Australian dollar to Japanese yen. Here I was seeing a sell signal, but Japanese yen is very weak, so it's being delayed now as we speak. Why I saw sell signal here was a breakout of this long-term downtrend line, uptrend line here, as you can see this lower red line, then a horizontal support, this orange area, and then the price was creating a correction equality pattern. This correction was the same as this one, and we actually had a reaction here. Okay, but the price decided to go higher and actually broke this horizontal resistance. So the correction equality pattern is no longer here, and what we're having here, the price is coming back above the yellow area, and that cancels the negative approach, that cancels the sell signal here. It does not mean that there's a buy signal here, but currently the pair is off the radar here because the situation is not clear, and I like clear situation, as you know. Gold had a bit of volatility last week here, strong downswings, upswings, and now we start with a small sideways trend, but in a very dangerous place. Why dangerous place? Because it's a strong, ultra important support for gold in the midterm and long term. Why is it ultra important? Well, it is a long-term uptrend line. It is a lower line of the symmetric triangle formation. It is also at the same time a horizontal support on $1,267 per ounce. So we do have three important supports in one place. And the thing is, well, I wrote an analysis about that on Monday, And usually the price moves in the direction of the least resistance, right? Here we do have a strong levels against the drop, strong supports, which eventual breakout here would cost and should cost a lot of effort. Bounce on the other way, bounce from these levels should be fairly easy. Why easy? Because we have strong supports here and no resistances ahead. So actually, in my opinion, due to price action rules, I think that bullish breakout is more probable here. But the price is still quite low. Yes, yesterday we had a nice hammer, but it's a very small hammer. It's still nice, but it's small, so it does not trigger us a buy signal. Here, for the buy signal, I think that we should come like at least here, above the middle of symmetric triangle. And actually, for the proper buy signal, what we should do is to break the upper line of the triangle here. But for that, as you can see, we need to break the psychological barrier of $1,300 per ounce. So we should see it climb like $25 higher. On the other hand, sell signal will be created here. Sell signal will be created $12 from the current price. So we are closer to the sell signal here, but to trigger that, the price would have to break important supports, which would cost a lot of effort. So in my opinion, the bounce is more probable. Next one is WTI. Oil, still positive, still above 55.1, which is an important support. They try to create something like a head and shoulder formation, but the thing is that the sentiment is still definitely positive here on oil. As long as we stay above 55.10, there is a positive sentiment on oil market. American dollar to Danish krone, that's a very interesting situation. At least it was. Perfect technical pattern. Let me remind you, because this situation was beautiful, was absolutely beautiful. There was an inverse head and shoulder formation here which failed. Instead of in the inverse head and shoulder formation, we got a wedge formation. Wedge is a inverse head and shoulder formation is a trend reversal pattern, so it was promoting a breakout of the yellow area. And instead of that, we got the wedge, which is a trend continuation pattern. So we broke the lower line of the wedge, which triggered us a sell signal. After that, we got a flag promoting further drop. It happened. Then we had a correction, which was the same in terms of the depth as the previous one. Maybe it wasn't a flag, but look at that. That correction was for 776 pips, more or less. This one was 790 pips, more or less the same. And also we bounced from the midterm downtrend line, so that's why we got a strong bearish movement here. Now it's being corrected, but that here was a beautiful selling opportunity. Sentiment is still negative. I would say that as long as we stay below those highs, we should see a further decline on this instrument. Euro to Japanese yen, that is absolutely beautiful. Let me remind you why is it beautiful? Because after this hammer was created, and that was 2 weeks ago. After this hammer was created, we made an analysis. We wrote an analysis about the positive signal for Euro to Japanese yen. And look at that. Obviously, when you're trading hammers on supports, what do? You buy at the end of hammer, you place your stop loss order below the tail. So if you bought here, your stop loss was here, and we showed that the red area is the closest resistance and the target for this formation. So open here, stop loss like 100 pips, and a target 220 pips, 2 to 1. That's also a desirable risk to reward ratio. and that was overall a very good trade. Currently, after the bounce from the upper line, maybe there is no such a strong sell signal here, but the sentiment on euro to Japanese yen is more negative than positive. British pound to American dollar, so cable. Here you can see those movements, so we will have a nice deal, no we won't, we have some problems with the deal. Here also, well, trading cable is definitely interesting. You cannot complain about the volatility. The thing is that in cable the price approaching very important support, which can be used by buyers to buy more pound. So that is a combination of uptrend line here and the horizontal support here. So in this area, I think we may expect, maybe a little bit lower, we may expect a bounce. Interesting correction quality pattern. I'm wondering, I think this one is a bit longer, so this one is 160 pips, this one is, yeah, so far it's 180, so a bit deeper. Anyway, it is still a correction. Here is the lower line of the correction, here is the upper line, that's a wedge. So far so good, as long as we are inside of the wedge, the sentiment is still positive, especially that we have a strong potential support here. Next one is an exotic instrument, which is American dollar to Singaporean dollar, which is, well, we said here that the price should decline and the price is declining, and now look, that is just a beautiful continuation pattern. Because if we would connect those lows, if we would connect those highs, what do we have here? We do have a beautiful flag here. Flag is a trend continuation pattern. Breakout of the lower line of the flag triggers us a sell signal. Let me go on a daily chart, because we would like to estimate the potential target for this. It's here. Yeah, so maybe not the best trade in terms of the risk to reward ratio, because we would have a sell signal here, stop loss like 30 pips, 60 pips take profit, so 2 to 1. Oh, still fine, fair enough. Let me adjust the trend line, right? Because, yeah, top, 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 top. As long as we are below the trend line inside of the flag, the sentiment is negative. And two heroes from today, which will be Australian dollar to American dollar and New Zealand dollar to American dollar. First, we will start with Australian dollar to American dollar, which use the long-term uptrend line, as you can see here. Well, in the long term, it's like a lower line of the flag formation, which should result in a further drop. But let's look on a daily chart, because in the short term we do have more positive sentiment than negative. Why positive? Well, first of all, we bounce from this uptrend line. We do have also a correction equality pattern here. This correction is the same as this one. Looking closer, we do have an inverse head and shoulder pattern. Left shoulder, head and right shoulder. We also broke the midterm downtrend line. Here we use that as a support, and currently we are fighting with a very important horizontal level, which was with us since the end of October. It was a support, after that it was a resistance, and now it was broken, so instead of support it should be, instead of a resistance, it should be a support. So here we do have a buy signal on Australian dollar to American dollar. let me just show you also the neckline, because neckline was broken in this formation, which actually triggers a buy signal, right? So Australian dollar to New Zealand, Australian dollar to American dollar, from the technical point of view, has a full buy signal. Let's look if New Zealand dollar to American dollar also is in a positive territory. Well, yes, it is. Those pairs are highly correlated. We are very close to the yearly lows. Yes, I know. That's possibly a very negative situation. But at the same time, look at that. The price broke this support, but that was a false breakout, and then they came back. They use that as a support again. The price is creating inverse head and shoulder formation, left shoulder, head, and right shoulder. Also, well, here on Australian dollar to American dollar, it looks better, more advanced. Here we still, for a buy signal, we need to see the breakout of the upper line of this formation, or upper line of the symmetric triangle formation, or upper line of the neckline of the inverse head and shoulder formation, depending from which point of view are you looking at. So price getting here will be a strong buy signal for me. Next one, American dollar to Canadian dollar, double top formation on a daily chart. Double top formation failed, inverse head and shoulder formation, left shoulder, head and right shoulder. Buyers failed to break the 50% Fibo and this resistance here. So instead of inverse head and shoulder formation, what we got was a wedge. We broke the lower line of the wedge, which actually triggered the sell signal. We made a double top formation, which creates a sell signal. And now the price is going through the horizontal support on 1.268. That's a very strong support. Well, at least it was. But for a definite breakout, for the definite sell signal, we need to see price closing below 126.7. Closing below 126.7 should give us a strong sell signal, aiming at least here, so that would be 200 pips downswing with like a let's say stop loss for 50 pips, 200 pips to gain, risk to reward ratio. Well, potential profit would be 4 times bigger than a loss, which makes it a great, absolutely great trading opportunity. Next one is Canadian dollar to Swiss franc, where after the breakout of this horizontal support here, we had a nice sell signal, and we were telling you about that. Who traded that can be happy, but it was a fast trade. Now there is no sell signal here anymore, because that breakout, although it gave a nice movement for a few days, 90 pips, it's a false breakout. So the price came back above the horizontal support. Price also is having this trend continuation pattern right now. We have to adjust it. Flag, wedge, it doesn't really matter. What matters is that we should see, with the current sentiment, with the false breakout here, we should see the breakout of the upper line of the flag or the wedge and a buy signal here. So as you can see, Canadian dollar is very strong, which helps the Australian dollar to Canadian dollar pair, which I was talking at the very beginning, to remain bearish despite the hawkish Reserve Bank of Australia. Now let's look at S&P 500, which is driven by politics like we saw last Friday. Tax reform, politics, cooperation with Russia, and really some weird news going on in the United States, but it doesn't stop Americans from making like all-time highs yesterday, right? So from a big correction that we saw on Friday, on Monday, higher opening, all-time highs. Now we do have a correction as well. Well, I think that the correction can be continued, and we can decline like 10 more points on S&P 500. It wouldn't be a surprise for me if the price did that. So a further decline to the long-term uptrend line. Now DAX. DAX is doing everything we need to adjust those lines, is doing everything to defend this 12,900 points support. Well, so far so good. We are defending this support since the beginning of October, but there's no clear signal for DAX, unfortunately, because we are in the middle between an important support, which is with us from the beginning of October, and important resistance, which is with us, let's say, from the 10th of November. Breakout of the gray resistance should give us a buy signal. A breakout of the orange support, on the other hand, should give us a sell signal. So what we do here, we wait. We have to wait for the proper trading signal here on DAX. American dollar to Japanese yen. Well, I admire traders who can see here interesting trading opportunities. I cannot. This pair is very boring for me. We do have this resistance. Well, should I connect those highs, those highs? This pair is, for the last like few days, few weeks, is crashing through supports, resistances. Let's say here is the important support, this blue one, right? Here, 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 here. Okay. Now let's say it's important. The gray one was important, but as you can see, it was violated here. So I don't think it's in the game anymore. Let's see this. It's not working, so we shouldn't be bothered. Big movements, no, mostly influenced by S&P 500. This S&P 500, well, with American dollar to Japanese yen, there is a significant correlation there between those two instruments. I would say that current situation is more of a correction pattern. Maybe not the greatest flag in the world, but still seems like a flag. So this promotes a further decline. And I would say that there will be a beautiful sell signal once the price will break the blue support. And last but not least, the star, shining star, Bitcoin. Bitcoin, which is going crazy for the past few months. Well, in November, many people thought that $5,000 for Bitcoin is too much. We had a correction. Then another one. $8,000 too much. We had a correction to 600. Fair enough. And recently, from 11 till $8,000, another correction. And today, as we speak, we are on all-time highs. Well, those deep corrections, as you can see on a daily chart, are nothing abnormal here on Bitcoin. So it happens like September, November, December. Oh, it happened at the November. So it's happening. Those declines of 30% of the value are happening on Bitcoin. Many traders were seeing a potential reversal here, But with those three, I think that from now on, traders will try to use it as a great opportunity to buy. Remember, when trading Bitcoin, remember one important thing. From 10th of December, CBOE is introducing Bitcoin contracts. So that opens a way for institutional traders to trade Bitcoins, and we will see how this will affect the Bitcoin price when traders will be allowed to go short on this market. We will see. So far, so good for Bitcoin traders. No potential disasters ahead. So future is bright for those who own Bitcoin, let's say from May or June, July, August, September, October. Everybody who has Bitcoin is now on profit because we are on all-time highs. That being said, guys, thanks very much for watching our daily analytical report. Now a short break, and after that we'll have a webinar about price action. So yes, we're coming back with webinars. I hope you will enjoy them, and see you in half an hour on price action, or tomorrow on daily analytical report as well. Thanks very much and goodbye.